Hey everybody, this is Jim at SP500chart.com. It's about 4:45 on June 13th, 2013. Before we get into it, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay. Interesting stuff. First off, just as a quick little reminder, this was our rising channel from the middle of April, broke down into a wider descending channel, which broke out on June 7th, but really reached a little bit more of breakout status on the next Monday on the 10th, started to pull back, and pulled back inside of this channel. But that whole 4-day move looked like it was bounded by these two red parallel channel lines, and we really could not identify those lines until yesterday. So when we did, I just kind of made mention that I thought we would have an up day today based upon the fact that we closed the day at the lower line in what I thought might work out to be a parallel channel. Smaller, but still a parallel channel that sort of is superimposed over this blue channel. And today, actually I think we can adjust that line just a little bit. Today we came up to that line just right around lunchtime, backed off a bit, and then powered through this top resistance line. Now we are, without any doubt, technically significantly above this blue line right here. I will remind you that the highest that we ever got over that line was back on the 10th, and the degree that we were over it was not huge. If we measure it from the height here, in other words, this is going to be the biggest gap I can find between this line and some level in the S&P. We find out that that is just right at technically significant, but certainly not a super convincing move. Now we are definitely technically significantly over this line. We broke out over this top line right here, and it looks like we put on the brakes near the end of the day at an interesting spot, and I'll show you why real quickly. If we go back to this all-time high in the S&P back from May and draw a line over the highs on June 10th, that's roughly where things ended today, just a little bit higher. Now, I still think things are basically the same. If the S&P is able to get over this line here at about 1650, then this should act, even though it's not a real pretty pattern, this should act as an inverted head and shoulders pattern, taking the market, the S&P more specifically, up to roughly 1696. But if we fail to get over that line, and instead we come down and start knocking down resistance, start knocking down support levels, then we would be looking at a likely move. And again, I'm basing this on the fact that we've had a little up and down action going sideways through the month of June. If we crash through this line here, then I would be looking for a move down to about 1553, 1554. So right now, what we know about this market being very bullish, and also because we are now, once again, over this descending channel line, I would be predisposed, I think, to the bullish case. But it would not be confirmed until we got over 1650 with some conviction. So that's really the only thing that happened today. Is we did bounce on this bottom line, as we mentioned in yesterday's video, and then we got over this top line right here in this secondary descending channel that's bounded by these two red parallel lines. We should encounter some resistance up here around 1650. Could find some resistance at this yellow line as well. So there's going to be some resistance up ahead. Support now should be, I think I can get rid of this line because it was only serving one purpose. Our support would be our broken resistance lines, and our resistance would be our broken support lines. Because remember, this line used to hold us up. This line used to hold us up. Now we're under those. But conversely, this line used to hold us down. This line used to hold us down. And we're over those. So that means resistance, but I think resistance that can be overcome in the roughly 1644 to 1650 range. And again, I would look at our resistance kind of as a cluster, because we got three lines here within about 11 points of each other. Need to get over all of those. Then we can look forward to that move to just under 1700. As far as support goes, it all comes from the immediate support comes from broken resistance lines that should now be turned in the favor of the bulls. There's also this line down here at about 1598 where we bounced earlier in the month, and I would expect that line to be support as well. If we extend these lines on down, interesting to note that they converge right at about that 1598 level. So guys, nice day for the bulls. We got our bounce. We even got our breakout of this channel. Let's see if this powers on up to test 1650. And if it can get up over it, then we are looking for a likely move to about 1696. I want to thank you for your time and attention. I want to thank you for your support. We got one more day in this week. Hey, let's see what it serves up.